Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, John in Toronto asks if the rental market in Toronto for condos is really softening, and if so, what could that mean about the market?
Is the rental market for condos softening in Toronto? Yes, but it's also softening in Vancouver, and it's softening in Montreal. It's softening in Windsor. It's softening in Calgary. This is part of the trading cycle. So the longer a trading cycle goes on, the higher the concentration of builds being completed are going to be towards lower priced homes, increasingly smaller homes. So what happens is then the market rolls over, and when the market rolls over, you have all of these condos that have been pre-sold that are rushed to market by the builders, because the builders are now fearing that the housing market correction will stop those units from closing. So if anybody looks at the data from CMHC, you'll see that in June, when the lockdown ended in most provinces, in other words, when the construction workers could get back to starts jumped. They surged forward, and the same way that they did in the 2 weeks prior to the lockdown happening in the first place. And the reason for those rushes by the building community is because the way that financing is and the way that the behavior of home buyers are. So because CMHC lends money at different stages of the construction process, builders had to get a shovel in the ground, which is registered as a start by CMHC, in order to get their next round of funding on the building. They rushed to get those shovels in the ground in the last couple of weeks in March before the lockdown happened. Then, the moment that the lockdown was released, you see this massive amount of construction work jump back on the bandwagon. In other words, these two periods were disproportional to the build-up that was taking place prior to those two periods happening. This is also what's happening in the rental market. You see, people are now closing on their pre-sales. Some of these pre-sales go back 3, 4, 5 years. The units were purchased at prices often 3, 4, and 5 years ago. So those people are coming to market with a unit at a lower price. In other words, the price they paid for it years ago on a pre-sale basis are not the same prices that we're selling in 2019. So those units are closing. The owners of those units don't have to get as much rent for the properties as they would have had they purchased it at the end of the trading cycle, for the sake of the argument, in 2018, 2019. So you're seeing those condos get finished, come to market. Well, they don't have to charge as much rent and still be okay as an investment. Well, I'm not going to argue it's an investment, but the way that the real estate investment community views these things in the post-2013 period, this is what goes by an investment. So you've had all these condos come to market, and since you don't have to get as much rent to still have it being a worthwhile investment, you lower the rent and you get it rented out. There's also on the other side people who purchased later in the cycle. Let's say you purchased one in 2017 or 2018, and that builder has rushed to get it completed now. They're completing it, but your price is substantially higher than the families who entered the investment market from 2015, because of course you had all of those price increases on all these wonderful words of investing by all those investing syndicates, all of those realtors, all of those real estate brokerages, all of those membership sites for investment out there, those people can't rent for the same price, so they're going to be taking a hit. Where the real question, John, you need to be watching is when the for sale inventory increases, because it's going to happen. These condos are increasingly going to come to market. Because as an investor who purchased in the 2017, 2018 period, 2019 period, as those homes are closed, 2020, 21, and even into 22, increasingly those units will immediately be listed for sale. The investors will take a loss, and they'll be happy with it. Their effort will be to try to recover their costs, but even if they have to take a loss, they'll do so. So because we're never measuring apples to apples in the rental market or the resale housing market, in other words, average rents and average prices are never measuring the average home. They're measuring totally different things. The rents that are being quoted as dropping are basically for brand new tenancies, because anyone in an existing tenancy is probably going to be paying the exact same as what they were paying last year. In other words, the rent didn't soften. But the new tenancies is where these rent decreases are being recorded, because these new tenancies right now are predicated on the purchase price of pre-sale condos from 2015, 2016, when the prices were lower. So it's a whole complicated discussion that really has to surround this, these talking points that you're hearing in the paper all the time, John. The truth of the matter is, if you're looking for a brand new tenancy on a small condo, then you can get a better deal on a condo than you could have got had COVID not happened. But for every other property type or any existing tenancy, those discounts do not apply. Since around 92% of all tenancies in Canada are a continuation of a previous tenancy, that means about 92% of the market won't see a decrease in rent. What you will see is you'll see a hold on your rent for the first time, possibly since you've been a tenant. But you're not going to see a decrease. It's those new tenancies where you're going to see this take place. So when you're reading these things, John, don't expect to go out in the rental market and get a better deal on a rental home. This correction is totally unlike the correction from 2008, where we were building single-detached and semi-detached homes at a high enough rate that the rental pressure on the housing market in Canada was negative, even in the single-detached, semi-detached class of townhouses back during that period. You're not going to see that now. Those tenancies that have been entered into are long-term tenancies, and if you're in a rent-controlled province, your rent has only gone up with inflation. The only thing that you're going to see with soft rentals are for brand new tenancies on the smallest condo units that are available, the things that most people simply don't want to rent.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth, and discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Ross Kay. Ross, Julia from Montreal asked, Royal LePage last week claimed pent-up demand and low mortgage rates were driving house prices higher. Ross claims they're not. Well, Ross, how do we know who to believe on this?
Well, I'm going to say you can believe me, because what you're hearing from Royal LePage is exactly what we told you was going to happen. The only difference is Royal LePage is framing it as being higher house prices, which they're not. Royal LePage is admitting pent-up demand is driving home prices higher. Why? Well, if you sold your lower price home in April and you were moving into your brand new home, or you're looking to buy your trade-up home, a more expensive home, then that is the demand where the demand is. Higher priced homes. If mortgage rates are lower this year than last year, that means if you earn the exact same income, you can go out and buy a more expensive home. It doesn't mean that house prices are higher. What it means is the aggregate that the average buyer, the home that the average buyer is acquiring, is a higher quality home. You have Royal LePage coming right out and saying the exact same thing that we have said on the show, but Royal LePage uses it as false house price illusion. Royal LePage, Phil Soper comes out and says, pent-up demand and low rates were driving home prices higher. What Royal LePage is basically saying is this: wealthier home buyers who pay less for mortgage interest this year than last, or even a few months ago, are buying more expensive homes. When you buy more expensive homes, the average price goes up. This goes right back to the discussion we've had over and over again on the show about a used car dealership. If you can buy a whole bunch of Lexuses for $500 a month versus a whole bunch of Toyota Camrys for $500 a month, people are going to buy a Lexus. You're acquiring a higher quality of car for the exact same price. The prices didn't go up. The price of those cars didn't change. You simply paid less interest, so you got more car because the payment is the same. So, Julia, what you're hearing is, you're hearing Royal LePage affirm our monthly discussions here, our weekly discussions here on the show, except they're framing it in a way that makes you think house prices are going higher when they're not. First-time buyers were locked out of the market as we exited the lockdown. That means the share of sales going to first-time buyers and first-trade buyers is drastically reduced right now. The result is the share of sales going to trade-up sales, executive class sales, ultra-luxury class sales is far higher. You also have late cycle trading patterns appear, which means that how the trading cycle works is at the end of the trading cycle, when the most amount of home equity wealth has been acquired by those looking to move up to the property ladder, a certain percentage of those buyers will move from a more expensive area to a cheaper area. When they move to a cheaper area, they get to buy a more expensive home, a higher quality of home, for the exact same cost that they were living in their lower quality home in those more expensive areas. I mean, the way we look at it is this, Jim. Normally, people can't afford to buy in Beverly Hills. But if Beverly Hills house prices drop by 50%, you can move into Beverly Hills. It works the opposite way as well. If you live in the lowest price house in Beverly Hills, you can buy the highest quality house out in the suburbs. The price of the two homes is identical. The only difference is that you moved out. This also goes back to how house price illusion works. Because in the same manner that foreign buyers purchased in Vancouver in the spring of 2016, they bought ultra-luxury class homes. Because they entered that market as a non-resident buyer, they were buying a home at the top of the property line. So the 4 or 5 sales that normally took place below it didn't take place. Well, you can imagine what happens to an average when you drop the 100, the 200, the 300, the 400, and you're only measuring the 500. All of a sudden, your average goes from 300 to 500. late trading cycle buying behavior means this happens all over the place in lower price communities. It doesn't mean that the house prices went higher. It just meant that the average buyer was buying a more expensive home. And as we have said in the show for the last few months, this is the singular opportunity since 1980 where you have been able to see this real, live, in real time, right before your very eyes. Because every real estate board across Canada who produces a sales distribution graph or a sales distribution chart of some form or another, this information is sitting right there for everyone to look at. Prior to my firm being built, no one ever knew what to look for in these charts. Okay? This is old school real estate. Everybody now can look at these charts and they can see the difference. They can see the share of sales in houses that are over $1 million in the Greater Toronto area skyrocketing over the last few months, while the sale of homes under $600,000 declined. That is typical cyclical behavior that you never see. You never get the opportunity to see how house price illusion works, how the MLS house price pyramid scheme works. You're seeing it right now, and Royal LePage just confirmed it.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Ross Kay. Ross, last week, Poloz, the former governor of the Bank of Canada, claimed mortgage rates will remain low for a generation. Isn't that about 20 years? Ross, is that the consequence of the interest rate trap you've explained on the show for the last 2 years?
Yes. But my problem is, Jim, this gentleman just left his job a couple of months ago. And now he's coming out and saying that interest rates are going to remain low for a generation. But he doesn't go on to say why. Why, with the interest rate policy that he enacted from June of 2013 till June of 2020 when he left, or let's say the month before, May of 2020, before he left. Why did he not explain that policy of his has locked us into this trap that we face today? An interest rate trap that is going to impact inflation, in other words, the cost of living. It's going to impact house price changes over the next 10 to 20 years. It's going to impact every single aspect of our lives. Why did he not say that? Why did he not say, I'm sorry, Canadians, I made a mistake. While I was governor of the Bank of Canada, I wanted to look like a good guy. I wanted to be looking like the hero. I wanted to be looking like the stud of the federal bank, the central bankers of the world. I wanted to be nominated for awards because of what I did. Why didn't he admit that? Because that's exactly what the gentleman did. He relied on a continually declining interest rate strategy that had been enacted way back in 1982. Okay, folks? This strategy has remained intact from 1982 through till today. And it's trapping us to where we are right now, which is why I believe he's now coming out admitting his policy of continually declining interest rates has caused the nation to be gripped in a generation of low mortgage rates, which means we are going to have a generation of low interest rates. Imagine what that does for the frugal Canadian who prefers to save their money as best that they can. He is saying you're not going to get any interest on those savings. What he's basically saying, Jim, without saying it, is that the savings rate, it will not equal the inflation rate. We know that because of the globalism that exists in the world today, that Canada is no longer an island. We have successive governments from the day NAFTA was signed, originally from Brian Mulroney, through till the new trade agreement was signed with Christina Freeland. This blame goes across all political parties. They have created an environment where standard ways of living, building wealth, raising your life, building a life for yourself, no longer apply. Because if you can't get enough bank interest on your savings to offset inflation because of what happens in another country, in another part of the world where your votes don't matter, there's something wrong. Jeff Rubin, former chief economist and chief strategist for CIBC World Markets, a man who himself for a decade and a half, 2 decades, was a pro low interest rate, growth-based strategy advocate while he was working at CIBC. Has authored books now where he admits the middle class of this country has been eaten away at by this political globalism. We can't have in this country a trade pact with another country where they can use slave labor for the sake of the argument. You know, you want to go buy a new computer today, you can't buy a computer built in Canada. You want to buy a new television today, you can't buy a TV built in Canada. If you want to buy a new car today, there are only a select number. Luckily, some of the best built cars in the world are built in Canada. We're not building a pickup truck in Canada. I can't get an F-150, a Dodge Ram, a Chevy Silverado in Canada. The types of cars that Canadian families want. You know, the types of cars that Canadian families who choose not to take an airplane flight once a year and instead burn their carbon with a little bit extra fuel consumption, who now the government wants to penalize more because they are responsible Canadians. This is the type of situation that these leaders have led us into. And until we as a people demand accountability from those we push in positions of power, this is where we're going to be. Polas came right out and admitted it 3 months after he left the job that interest rates or mortgage rates will remain low for a generation. Why did the man, while he was in the throne of power, not explain to Canadians this is what was going to happen? It is common sense. You can get a spreadsheet out, Jim, and you can go back from 82 through till today, and you can see where the housing market, house price growth, immediately was halted or reversed just on a level interest rate, let alone when an interest rate rose. That means this house of cards that all of these political global elitists have built our economy on and have shackled the Canadian family to have to living to is going to come crumbling down because it is not sustainable. We are now into the second nutbag idea that's out there, modern monetary theory. You can print money forever. Okay, folks, Polas, if that was true and you knew that that's what was going to happen as a result of you continually declining interest rates, what else was possible if you knew that that was possible? What historical events that are destroying our country today are a consequence of that same type of theory? Well, I'll tell you, Jim, what it is the Chinese currency. How have the Chinese been able to manipulate currencies, including their own, in the way that they have since 2013? Since, what's his name? Xi Ping, whatever the heck his name is, took power in China in 2013. Why has no other economist, central banker, globalist, or politician called out China from working a Ponzi scheme on their own currency? Do we actually believe that the GDP numbers issued by a communist country and that the world believes are true? I think if you ask any average Canadian, do you believe that that could be manipulated? The average Canadian would say, yeah. Why did our politicians not do it? How were the Chinese allowed to take their own currency and buy American currency? Where did that currency come from? where did all these Chinese dollars of yuan come from? There was a certain amount of them in 2013. Now there's a whole bunch more of them today. Well, is that the balance sheet of the Chinese Communist government that we're going to rely upon? Polaz has come out and explained that from his hiring in June of 2013, which mirrored the new communist leader taking charge in China, till today, he has placed the Canadian voter, the Canadian family, at risk for a generation. He admitted it. He admitted it with a level of arrogance that implies that the Canadian people are too stupid to understand what he's saying. And what I'll say is this: where were you calling out China for growing its money supply and buying up the world? Where were you calling out China for growing its money supply and allowing Vancouver homes to be purchased by Chinese communists? Where were you when the Chinese government was buying up debt around the world and then creating leverage with other countries, which it's now squeezing in a vice? This is the people that we're dealing with. I believe this next generation will destroy the legacy of those who have been in power the last 10 years. I believe the legacy of Polaz will be one of embarrassment, and that if there was any statue ever being considered being erected, it will be torn down and tarred and feathered and broken up with a sledgehammer, because it is their incompetence or arrogance or simply their globalist elite viewpoint that has led him to say, for a generation, interest rates on your saving will be nothing.
Ross, thank you so much for chatting with us.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from the wealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.